IBM and LVS are now underway. Tesla's kicks off at the bottom of the hour. We'll bring you all the big headlines from those quarters, plus crafting a deal. Sources telling CNBC that PayPal is in late-stage talks to buy Pinterest. What a tie-up could mean for these two companies. And we're trading this record rally, the Dow hitting a fresh all-time high today. We'll break down where our traders see the market headed next. But we start off with an earnings alert on Tesla. Shares of the EV maker under a little bit of pressure in the after hours after reporting its results. Let's get to Phil LeBeau with more on the company's quarter. Phil.
Melissa, I'm not surprised to see the stock selling off a little bit. Remember, it's had a heck of a move higher over the last couple of months, especially over the last month after the better than expected deliveries in the third quarter. This was a record third quarter in terms of profit for Tesla. Look at what they earned for the third quarter, $1.86 a share. That was comparing with estimates of $1.59 revenue, also a record, $13.76 billion, well above estimates. Automotive gross margins ex zero-emission vehicle credits, 28.8%. For some perspective, most analysts were expecting it to be closer to 24.5%, maybe 25%, so much stronger than expected there. And it's all set up by record deliveries in the third quarter. They delivered a little over 241,000 vehicles in the third quarter, now on pace to deliver well over 800,000 vehicles. At least that's the expectation once they report their fourth quarter numbers. Perhaps we'll get some clarity during the conference call in a little bit. And speaking of the conference call, here's what people are going to be focused on. First of all, do they give us any better clarity on what's happening with the gigafactories in Berlin and in Texas? When do they actually start production? It's supposed to happen before the end of the year. Do we get a little more detail about that? Also, what's happening with the semiconductor chip supply as well as the supply chain? What's the outlook there? Remember, Tesla did better than other automakers managing the chip crisis during the third quarter. And finally, will Elon be on? In terms of, will he be on the call? Remember, and during the last conference call, he said that he was likely going to step back from doing some of these earnings conference calls unless he felt that the call warranted for him to be on. We'll see what happens, whether it's him or other Tesla executives instead of him. As you take a look at shares of Tesla, I mentioned that the stock has been moving higher. Look at the stock in the last 1 month. You look at the last week, it has been on a tear. The earnings call starts at 5:30, Melissa, but again, a record third quarter, record quarterly profits for Tesla, earning $1.86 a share, well above the expectations. Melissa?
Oh, I hope Elon is on. It's always much more amusing when Elon Musk makes an appearance on those conference calls. Phil, you know, the $25,000 vehicle, the $25,000 vehicle seems to be the key to getting Tesla into emerging markets and sort of developing countries, making a much more global brand, more affordable brand. Do you think we'll get any sort of guidance on that?
You know, we talked about this, 3 or 4 weeks ago when there was a Tesla event and Elon Musk was giving us an update. And in fact, Gene Munster was on. He goes, boy, I hope we hear about the $25,000 vehicle. And Elon Musk said, I'm not going to talk about a $25,000 vehicle. That's not what we're focused on right now. So remember, that was, a lot of people were expecting it then. So I know we bring this up. It seems like every conference call, or at least every event where Elon is speaking, will he finally give us some clarity in regards to that? I'm not holding my breath.
All right, Phil, thanks. Keep us posted on the call. Phil LeBeau with Tesla's earnings. When Phil said heck of a run up into earnings, he meant 18% in the past month and 31% in the past 3 months going into this print. The stock is down just under 1%, Tim. And so the reaction in that context is pretty good.
I have to tip the hat in terms of this being a low vol stock suddenly. It speaks to at least where they've removed a lot of the uncertainties around the business, and the valuation is not something that's necessarily, I know growth stocks get punished when they don't grow, but you can't say Tesla's not growing here. So yes, very impressive. I will say that, you know, even if you annualize this $1.83 number and, you know, third quarter profitability, fantastic. The pushback is valuation, but you know, if you get $8 a share annualized in 2021, and you take that out to 2025 and you say $40 a share, which is obviously 5 times, this is still a stock trading almost 30 times. And so that's the issue here. It's not the execution. It'll be very interesting to hear Elon talk a little bit about margins, because a company that's been so successful being more vertically integrated than some of their competitors on chips and other parts of the supply chain is still spending money. I heard Elon say at his investor day, they've been spending a lot of money flying parts around the world, et cetera, et cetera. It implies They can be more profitable in the future. You know how I feel about the valuation, so I can't jump on the bandwagon here. But these are good numbers.
Steve, what do you think about valuation? I mean, do you think this is the kind of stock that you have to just sort of hold your nose? I mean, it's clearly, at least right now, the market leader in EVs. I don't know if GM or Ford has that runway to the number of cars that Tesla is currently selling, the rate at which they're selling them.
Yeah, I think you do have to hold your nose. This is one that I actually missed. I wanted to buy this after that split announcement last summer, and the stock ran up. So to Tim's point, you have there's a bunch of levers they can pull. And quite frankly, the fact that they can make a car more efficient than the standard car makers is leading the pack in the tailwind. Having said that, you have energy storage, you have batteries, so you have services, you have the full self-drive that's coming on. They're way ahead of the pack there as well. I think GM is the closest to them on full self-drive. But once again, if you look at the chart, it looks perfect. There could be a double top issue around the 900 level, but this is something where he can pull that lever again on another stock split. I wouldn't put it beyond him. He can say it's about energy storage. Oh, and yeah, he could talk about another coin that he wants to get behind. So there's tremendous amount of levers that the other car companies don't have. So yes, I think at a certain point, you got to hold your nose and just buy it.
Dan Nathan, did this quarter confirm or affirm Tesla's run that we've seen over the past few months?
Well, it's interesting, and I'm sure Pete's been taking a look at this. The options market was only applying about a $35 move tomorrow in either direction on an $865 stock. That is like minuscule. That stock normally could move that intraday, you know what I mean, without any news like that. So the run up 55% from the May lows. You just talked about the stock being up about 15% in the last month alone. I mean, it really reminds me of that run into Netflix's print last night when we were talking about it. It's like, what were they going to do to get this stock going higher? You know, and we already had deliveries, that sort of thing. The margin news is great. Listen, again, the stock's at 865. It has an $865 billion market cap that's greater than, I don't know, 50, 60% of the global market cap of autos, okay, right there, and they have less than 5% market share. So if you tell me that you're not worried about that other competition who actually knows how to make cars, maybe not as profitable on the scale in which they're doing it right now as far as Tesla with a 28.8 gross margin, I just kind of say to myself, this is just like the most unhinged thing I've ever seen. I'm not railing against it. I don't own it. I'm not short it. And I'm not that dumb, you know what I mean? But it doesn't make a whole heck of a lot of sense that anything that you see in this print is going to make you run out and buy the stock here.
Dan always delivers memorable lines, and I think the memorable line out of that little monologue was unhinged. Pete, do you think that this is the most unhinged thing out there, as he calls it?
You know what? It's always been that same stock, though, Mel, right? I mean, the idea is that he delivers, and they delivered on the deliveries. They've also delivered on the margins. They continue to be the leader in the EV space. They've got over 60% of the market share there. So there is a lot of different positives that I think we can focus on, and there are the negatives. Of course, you look at valuation, you can't even look at that valuation. It's crazy. But the reality is they just continue to get data. They continue to deliver. And I think the fact that Elon Musk has so many different ways that he can pull levers, I think that gives him a very, very leading position that he can hold on to that lead and continue to move to the upside. And it's not just about the cars themselves. It's about energy and production of energy and all of the things that go into what Tesla really has become over all these years. It's an impressive move. And I think when you look at this today, I think the interesting part is there were a lot of option buyers over the last week or two. And Dan was talking about some of the movement expected. I can tell you this, they were buying the 850 strike calls last week, huge numbers, Mel, and they were rolling those up from already great numbers that they'd already delivered. So this is one of these where I think you do have to close, you know what, you got to plug your nose, you got to look at this and use the options. I think that's the real key here, because when you look at that stock, yes, the price is unbelievable, but with the options, it gives you that risk reward where you know exactly how much you have on the table to risk and what type of reward you can get. So the options market continues to be the way you want to play this stock.
Tim? Tim?
Can I ask Pete and Dan, our options mavens, a question about Tesla? Because historically, this has been such a volatile stock. And Pete, you're recommending options. Is this as good of a time, not only in terms of where the stock trades, but has implied vol gone down enough in this that actually really makes options in Tesla for the first time more attractive than they've ever been?
Pete, why don't you field it?
I think so. I think so, and I'll let Dan respond as well. But when I look at Tim, you're 100% right. When I look at the implied volatilities, what it once was, where it used to be in the couple 100% type of implied volatility versus where it is now, that has come in immensely. Also, I think that a lot of people who get more and more sophisticated here, you can make spreads. You can have $20 and $30 and $50 spreads where you're able to get in there and still position yourself for the upside or the downside, either direction. Wherever you want to go with Tesla, whatever your gut is telling you as far as the direction. My gut tells me the direction continues to be higher, and I'd rather be in the calls rather than the puts.
If only there were a show about using options. Oh, there is on Fridays. All right. Let's get more on Tesla's latest quarter. Let's bring in Fast Money friend Gene Munster, partner at Loop. Gene, great to see you. I know that you're a bull. I know you love this quarter, except for maybe the solar and energy line of the puzzle. But in terms of margin, this is what really grabbed me in your Twitter feed, and that is that you would expect Tesla to have margins the size of Apple's in just a few years. What does a roadmap look like to get there?
So there are three pieces. The first is just better efficiencies related to Giga Austin and Giga Berlin. These are new factories from the ground up. This is something that traditional auto is not doing. They're retrofitting existing factories. New factories means better alignment, productivity, and margin impact. Second is FSD. This is a little bit elusive. It's a topic in of itself. But eventually FSD, I think whether or not they get to full self-driving, they're going to have enough there where they can charge more for it, and that is software revenue. And the third piece is around batteries and the components. And as those continue to decline, what Tesla is doing around batteries is a half or full or 3 steps ahead of the rest of the battery industry. And I think that those three combined get you to that 40%. And I want to bring that point back to a theme, and the theme is to hold the nose when it comes to Tesla valuation. If you subscribe that this growth can continue, and that is quite impressive, 73% delivery growth versus the big auto in September down 23%. I mean, something is going on here. If you believe that this growth can continue, you can see a company that goes from, call it 70 billion in revenue next year to 400 billion. And I'm going to get to the point, my point here around profitability, is that if they do, in fact, inch these margins higher, gross margins up to 40%, let's say in the next 3 years, they're going to get an Apple-like multiple that is 6 times revenue, and that would equate to about a $2,500 stock. Now, 5 years out, a lot can happen between now and then, but there was much more to this quarter than meets the eye, and I think the substance of what the revenue growth and the profitability trend is, I think this is still a great opportunity to own Tesla for the long term.
We were just talking to Adam Jonas of Morgan Stanley yesterday, Gene, and he was saying that the market, he thought, underestimates the manufacturing piece of this puzzle, which you highlighted as well. The fact that Tesla can build factories from the ground up and use new technologies like a gigapress, for instance, to really reap efficiencies like making the chassis out of one single piece. How much of this is, how much of this is far away? How much of this is within the near future? Because I would imagine that this is an important piece of the puzzle when it comes to getting a $25,000 vehicle onto the market.
Exactly. You have to, a big part is this manufacturing. Answer your question is, how far is it away? It's a few months away from initial production in Austin and Berlin, and probably a year and a half away from really hitting scale production. And so this isn't going to happen overnight. The margins aren't going to jump. You're not going to have those efficiencies overnight. But if you have the luxury of investing, I would consider that owning something for more than a year. I think you're just going to continue to see those manufacturing efficiencies find their way into the gross margin.
What's the number one question you'd ask Elon Musk if he were on this call?
I want him to know how realistic is he to have full FSD, that is general availability. That's one that you can trust. There's a lot that goes into that, but when he believes that, they are, it's really noteworthy that they are keep pushing forward, and that these betas And there must be something there. There must be some concept of a timeline, because once that happens, I mean, I think there's a huge turn in terms of how investors even more optimistically think about the multiple on Tesla.
All right, Gene, I'm going to let you get ready for that call. Gene Munster of Loop Ventures, the call again underway in just about 15 minutes' time. We'll see if Elon Musk makes an appearance on that one. Pete, what's your number one question for Elon Musk if he were there?
Well, quite honestly, it sounds crazy, but I actually would, and I think Tim was the one who brought this up, talking about Bitcoin and some of the other different types of places that he might try to have investment pieces of this company, because we already know enough, I think, about what the direction is, what the company's doing, and what the direction is in terms of which type of vehicles he wants to sell. Obviously not the low end, he wants the higher end, and he wants those margins, but I'd be curious about what his thoughts are going forward in terms of some of those investment ideas as well.
We've got an earnings alert meantime on IBM. We're tracking those shares lower in the after hours. The company's call is underway. Let's get to Deirdre Bosa, who's back with the details. Hey, Debo.
Hey, Melissa. Well, CEO Arvind Krishna opening up the call, acknowledging that in some areas the results did fall short of their own expectations. The streets as well. He said that the upcoming spinoff of the legacy business is just one of many actions that he's taking to focus the business on hybrid cloud and AI and improve its financial profile. But of course, Big Blue continues to be dogged by the same question for years now. Can it actually turn the ship? Despite all the company's talk of next generation tech like hybrid cloud and AI, it missed revenue expectations, net income's declining, and it continues to disappoint investors and underperform the broader markets and its gray chip peers. Even its cloud segment, guys, showed some decelerating sequential growth. And of the four major divisions, only Global Business Services beat the street's forecast. Systems revenue, I want to point out as well, because that includes hardware. It was down nearly 12% this quarter, despite a pickup in IT spending amid the pandemic. There was no guidance either, guys. We are getting ready for that spinoff on November 3rd, but there's some skepticism whether, of course, IBM can turn that ship. Melissa, back to you.
Deirdre, thank you. Deirdre will be on the call. Deirdre Bosa, systems, they're saying, was soft because of a mainframe upgrade that's happening in the first half of next year. But if you take a look at the cloud business, I mean, up 2.5%. Tim, I don't know, can you make the case for IBM after all of these quarters of disappointments?
Look, Red Hat was a great acquisition, but it's not enough to pull this thing. They're not going to grow revenue. The top line won't grow for 5 years. And it's a company that also, I think, forget the risk that may be around their accounting and what's truly going on there. It's more that I think they have to make acquisitions. And so for investors, there's no free cash flow here that's coming back to you for a company that's not, growing the top line anytime soon. These are the things to be concerned about. A stock that's underperformed the triple Qs or the NASDAQ 100 by 700 basis points this year, it's not getting better. And so again, you need to see more cloud growth, but it's impossible for Red Hat to pull this giant ship and turn it around overnight.
I mean, Red Hat was up 17% in the quarter, and that certainly wasn't enough. Grasso?
Yeah, when I look at it, it's counterintuitive to what you would expect from when I'm talking about tech here. I picked this years ago as my secular short, but when I look at it now, I think I'd be a buyer of it here. A, it's cheap. It fits into that value bucket. B, you have a yield of 4.6%. You're not buying a stock for that, but it does fit really into that value bucket nicely. And if we start to see rates rise, I think that this can really outperform. If I told you that this one is up 12% and it's outperformed Apple for the year, you would scratch your head, right? So think about that. What would you do with Apple here? You're not going to call that a secular short. You're not going to call that something that you should dump right now. It's a value tech stock. So I think that we're throwing out IBM a little too early or a little too late, however you want to look at your timeline. I think that it's actually worth buying on this, believe it or not.
Contrarian view there. All right, coming up, some interest in Pinterest. PayPal reportedly in talks to acquire the social media company. The deal could be worth nearly $40 billion, but doesn't make any sense. One top analyst sure thinks so. He'll tell us why straight ahead. And later, we're all over the after-hours action shares of Las Vegas Sands. The stock is moving lower on earnings. The call is underway. We'll tell you what the casino giant is saying about the future when Fast Money returns.